All right, let's talk about a stock that's got everyone buzzing. Tembo Global Industries. It's one of those companies that's just impossible to ignore. Today, we're going to break down exactly what makes this investment case so polarizing. Okay, let's just jump right in with the number that's turning all the heads. Tembo's revenue has gone from about 79 crores to over 850 crores. And get this, in just 5 years. That is the kind of explosive growth that gets investors dreaming of those multi-bagger returns, where your money multiplies over and over again.
And that kind of growth, it really leads us to the one central question that defines this whole story. Are we looking at a rocket ship that's perfectly fueled up for a trip to the moon, or is this thing about to blow up right on the launch pad? Let's dig in.
So to really get why there's so much excitement, we have to look at the success story that makes Tembo so attractive to investors. The numbers here, they're seriously compelling. This timeline really puts it all into perspective, doesn't it? I mean, back in 2020, this was a pretty small company. 79 crores in revenue, just 2 crores in profit. Now, you fast forward to today, and wow, we're talking 850 crores in revenue and 65 crores in profit. That's not just growth, That's what you call a hyper-growth curve.
So what does that all average out to? A 57% compound annual growth rate. Now, in simple terms, that just means for the last 5 years, the company's sales have, on average, grown by more than half every single year. Just think about that for a second. That's a phenomenal pace.
So you gotta ask, what's powering this incredible expansion? Where is all this growth coming from? Well, it's not just one thing. It's a very deliberate and very aggressive strategy.
So the growth is really being fueled by this aggressive diversification. They started out with a really stable core business, think engineering products, pipe supports, things like that. But then they started pushing into other areas like construction and even textiles. And now they're making these bold moves into completely new frontiers, defense and renewable energy. It kind of feels like they're trying to bolt on booster rockets from totally different space programs to get where they're going faster.
And their core business? It's the real deal. It's not just smoke and mirrors. I mean, it's backed by major industry players. When your client list has giants like Saudi Aramco and Tata Projects on it, that gives you a tremendous amount of credibility.
So the next question is, can they keep this up? Is this sustainable? Well, if you look ahead, the company's got a massive order book of 1,350 crores. To put that in perspective, that is more future work already locked in than all the money they made in the last year. That gives them a really clear runway for more growth.
Okay, so we've got a powerful growth story, a clear runway ahead. It all sounds pretty good, right? But here's the thing about rocket ships. They have a control panel, and on Tembo's, some really important lights are flashing bright red. So, let's take a look at the risks.
And here's the catch. This incredible growth, it's being paid for with a massive increase in debt. Just look at this chart. In only 6 months, their short-term borrowing shot up from 40 crores to almost 200 crores. That kind of leverage, it's like pouring rocket fuel on a fire. Yeah, it can give you incredible thrust, but it's also highly combustible.
And to raise even more cash, the company's been issuing a lot of new shares. So many, in fact, that the stake held by the promoters, the founders and their families, has dropped from 55% all the way down to 41% in just 1 year. This is called dilution. It means that while the company pie might be getting bigger, each of the original slices is getting smaller.
And then, on top of all that financial strain, we've got what might just be the biggest red flag of them all. In April 2025, the chief financial officer and 2 independent directors, they all resigned. Now, when the people who are in charge of the money and the oversight all leave during such a critical high-growth phase, you really have to ask yourself, what is going on here?
So how do we weigh this? You've got this explosive, undeniable growth on one side and these really serious risks on the other. Let's see how the analysts are breaking it all down to come to a final verdict.
So with all these risks, you'd think the stock would be super expensive, right? But here's the twist. It actually looks cheap. We measure this with something called the price-to-earnings ratio, or PE. It's just a simple way to see how much you're paying for a company's profits. Tembo's is under 10. Its competitors, they're way up between 30 and 60. That low number could mean one of 2 things. Either investors are really scared of the risks, or this stock could be a massive bargain if they pull it off.
This analyst scorecard, I think it just captures the whole situation perfectly. It's like a tale of 2 companies in one. You've got a perfect 5 stars for growth and 4 stars for future visibility and valuation. Awesome. But then you flip it over and you see a weak 2 stars for the balance sheet and for corporate governance, exactly where all those red flags are flying.
And this all leads us to the ultimate investor's dilemma. The analysis shows two completely different potential futures. In the best-case scenario, if the company executes its plans flawlessly, the stock could hit 900 to 1,000 rupees. That's a potential 70% gain from here. But in the worst-case scenario, if those risks come home to roost, the stock could fall down to 300, 350 rupees, a 40% loss.
So ultimately, the takeaway here is that Tembo Global is a really high-stakes bet on execution. The potential rewards are huge, but the risks, they are just as big. And it leaves every single investor with one final, crucial question to think about. Is this a future multibagger in the making, or is it a cautionary tale about taking on too much risk way too fast? That's the billion-rupee question.